What do you think will happen to Tesla stock by the end of the decade? Analysts and experts have differing views, some of which are rather bullish, some remain increasingly pessimistic, but there are also some who are very certain that Tesla's stock will soar by 2030. You wouldn't want to miss this even now. When Tesla's stock is trading at about $133 per share, many continue to argue that the stock is overpriced. And this has been one of the most persistent disagreements between analysts and experts for a while. Despite the fact that some think Tesla is expensive now, there may be plenty of room for growth in the long run. Experts predict that the stock could double by 2030. An expert thinks Tesla stock could gain at least 170% by 2030 because of the vehicle. Business alone, that said, a majority of Tesla analysts think you should buy its stock. With many believing the price can rise above $1,000, of course, there is a wide disparity in expert opinions, with the average price prediction around $800 in mid-November. Billionaire investor Ron Barron, a known Tesla bull, shared his thoughts that Tesla stock could soar nearly 600% by 2030 to a $4.5 trillion valuation, solely based on the notion that Tesla can significantly scale to 20 million cars per year. To this, Barron excluded batteries, autonomous vehicles, robots, and the like from his bullish forecast. It's no wonder he sees such a meteoric rise in Tesla's stock, with a stake worth nearly $4 billion, or a cost basis of around $13 he would stand to make over $25. However, the $20 million annual EV target is fundamentally flawed in that it not only assumes a near monopoly or a void of competition in the burgeoning industry, but also unrealistic expectations related to global EV volumes and market share at the time. When Baron Musk outlined his plan for Tesla's sky high returns, he estimated that if Musk produced 20 million cars by 2030 at a cost of $50,000 each, that would generate $1 trillion in sales. He also estimated that Musk would earn operating profits of about 30 of that amount. And if those profits were multiplied by 15 to reach $4.5 trillion, the assumption also fails to account for any mass market sub-25 vehicle entry, which would in theory have higher volumes and lower margins. However, the 20 million vehicle target, which underscores this assumption, includes multiple critical flaws that challenge Tesla's ability to reach such a target by 2030. Barron went on to explain that the math adds up and his average vehicle price is reasonable compared to the current levels. Tesla recorded an ASP of around $54,364 during Q3 as global car volumes, assuming enormous market shares, lead to more rivalry and expensive parity. For Tesla to achieve a 20 million vehicle annual volume, it would require a near monopoly in the electric vehicle sector S, or a market without competitors, as well as a more than six-fold increase in factories and capacity. In mid-December, Barron stated that he thinks Tesla can reach 500 to 600 per share by 2025, and that the company could be worth $4.5 trillion in the next 8 to 10 years, not including robots. That does not include self-driving cars. That excludes batteries. As of December 2022, Barron's stake in Tesla are valued at approximately $4 billion across multiple funds for Barron Capital, according to Barron. Barron's cost base is as low as 13 in a number of the funds. I estimate that by 2025, it will be between $500 and $675, and in 8 to 10 years, he should be at or near 4.5 trillion. In reference to Tesla stock, Barron stated that if the EV manufacturer were to sell just 1 million cars in 2022, its market capitalization of $4.5 trillion would make it more valuable than both Apple and Saudi Aramco put together, as Musk stated in an earnings call last year. Barron also projects that Tesla will sell about 20 million cars annually in the future. If 20 million automobiles annually at $50,000 each in 2030, he will have brought in $1 trillion. His operating earnings will come in at about 30%. Barron stated a multiple of 15x to operating profits of $300 billion gets Bear into a price in reference to Tesla and its CEO, Elon Musk. Assuming Barron is correct in his price forecasts, investors might profit along the way with a target market capitalization of $4.5 trillion. Investing $1,000 in Tesla stock today might purchase 0.5 shares based on the current price of $133.42. If the price target of $500 is met, the investment would be worth $29.80 by 2025. Taking $4.5 trillion and dividing it by the current market capitalization of $565 billion for Tesla creates a multiple for shares. If Barron's price target of $600 is reached in 2025, the investment would be worth $3,576, making it worth $4.5 trillion. If Barron's price target is not met, the investment would be worth $8,487. This represents average annual gains of 74.9 to 93.6%, depending on when Barron's target is reached over the next 8 to 10 years. One of the largest supporters of Tesla, Barron is sticking onto his shares despite the company's enormous earnings and is making another wager on the long term, which may entice additional investors to follow in his footsteps, especially in comparison to the NASDAQ 100 and S&P 500 index, which generated returns of 348.9 and 187.6% respectively over the last 10 years. Tesla stock has gained 8,535%. This indicates that the company's share value has increased at a compound annual growth rate of 56.8%, an impressive return that hasn't always been without setback. As a result of investors adopting a risk-off attitude in response to the U.S. Federal Reserve's increasingly hawkish actions, Tesla's stock value significantly declined after it reached its all-time high of $414.50 per share in November 2021. As a result, investors should be aware that past performance does not guarantee future performance and should not base their predictions for the price of Tesla shares on historical data. For example, in the first 9 months of 2022, Tesla generated total revenues of $57.01 billion, $522 billion of which came from the sale of its automobiles. In that time frame, Tesla produced and delivered 908,573 cars. It's no secret that 2022 has been difficult for Tesla, with the company's stock plunging to all-time lows multiple times over the past year due to a number of challenges, including the U.S. Federal Reserve's numerous interest rate. Tesla has benefited from being a first mover in the electric vehicle market, but China's stringent zero-COVID policy and CEO Elon Musk's full-time participation with Twitter have contributed to the downturn. Massive EV overhauls are being pushed very swiftly by legacy automakers. OEM spending on EVs is increasing dramatically too. By 2030, Toyota plans to invest 8 billion yen, or roughly $60 billion on EVs. Hyundai has announced an 18 trillion won, $12.6 billion push for software and EV platform development by 2025, while the company is ready to invest $87 billion in the development of electric vehicles. With a $35 billion investment in EVs, and AVZZ not only wants to sell at least 1 million EVs by 2025, but it also anticipates that EV sales will be profitable by that time. While Volvo is aiming for 1 million EV sales by 2025, Volkswagen is targeting up to 3 million sales across all of its brands. Together, these three could account for 4 to 5 million EV sales in 2025, potentially accounting for around 25% of the market. This does not take into account Chinese OEMs, who include FEVs and target sales of about 4 million EVs by 2023 and 6 million by 2025. In other words, if current OEMs end up with a nearly 2/3 share in the EV market based on anticipated volumes, Great Wall is looking for 3 million EVs by 2025, and SAIC is aiming for 2 million. As predicted, Tesla could face difficulty scaling to 20 million vehicles by 2030. Tesla's target is based on the assumption that either the EV market miraculously expands to exceed 50 to 60 million units by 2030, or that the majority of big OEMs fall well short of their EV objectives in a mid-30 million car market. By 2030, Tesla would need to significantly increase its factory's capacity and footprint in order to produce 20 million vehicles. By 2024, Berlin, Texas will reach their full capacity, and with factories building the Roadster and other upcoming models, Tesla will be able to sustain roughly 4 million vehicles, bringing its total to 20 million. When building is completed, Tesla would require about 15 more factories, with completion dates varying from 6 months to 2 years. Between 2023 and 2028, Tesla would need to construct 3 factories annually at an estimated cost of $8-10 billion annually. Even if future factories replicate Berlin's maximum capacity of roughly 2 million vehicles, Tesla's required growth rate confirms the necessity for a major increase in its factory footprint. While there are currently a number of challenges facing Tesla, the electric vehicle manufacturer appears to have a bright future in the long run, and investors may regret not purchasing shares of Tesla at the current price later. Musk revealed last year that Tesla plans to build more gigafactories if this happens, which will significantly ramp up production. For additional information, consider purchasing Tesla stock